Time to book some if you're still in it with me. Time to book it if you're still in it with me, guys. The outcome was sensational. And this just summarizes that whole process, doesn't it? It's an unbelievable trade with an unbelievable outcome, guys. So welcome in. Hope you're all good. On top of that, we obviously had inflation numbers this morning. Inflation came out, CPI numbers came out at 0.7% UK. CPI numbers 0.7% year on year. Forecast was 0.6. The core CPI numbers also beat expectations of 1.3, came in at 1.4. RPI came in as above expectations as well, 1.4 against a prior of 1.2. PPI input also was bigger than expectations, 0.7 against 0.5. And output numbers were also bigger than expectation, 0.4 against 0.2. So that inflation expectation, again, building through the CPI numbers. Remember, we did this exact same experiment when we were looking at the bonds ahead of the US inflation numbers. Remember that? When we looked at bonds ahead of inflation numbers the last time, and we got a big winning trade based on the inflation that we were expecting. And yet we've just done it again into big inflation numbers this time, And obviously this afternoon we've got Canadian inflation numbers followed by, or at the same time as the US retail sales. Coming out in 15 minutes, guys. Markets are quiet. They're stuck inside of a little rotation at the moment. Nothing much for us to get too excited about. We'll obviously catch up with the other trades once we get these retail sales numbers out of the way. Forecast is for a good number, 1.1%, prior of minus 0.7%. And that's something we should be paying attention to. It might give us a bit of price action. The only downside for us is, of course, good numbers might be bad and bad numbers might be good. So it depends on the extent of the numbers. If these retail sales numbers come in poor, then of course that might mean a little bit of an easy approach by the Fed on this whole thing. If the numbers come in very, very, very good in line with the inflation numbers, the Fed is going to have to start taking some interest in what's happening because the concession process is going to need to start happening, which is going to drive yields of treasuries on the reissuance or the refinancing or the new supply coming in. It's going to drive those yields higher from the zeros that we've been seeing. So it's a very, 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 very dangerous period for the Fed at the moment, and they're very, very cautious about what's happening here, guys. In terms of the Fed this afternoon, we've got a TIPS repurchase of coupons, a very, very limited interest for us on this one as well. And that's what I was saying to the guys before. I think people start thinking we've got some inside information that's going to start giving you some brilliant trades. It's not. Most of the time it means nothing whatsoever. Sometimes we get some bigger numbers that can lead to a little bit of an interesting trade idea. So, you know, it's again just something that we just pay attention to, but most of the time it means nothing at all. So welcome in, guys. I hope you're all good. I hope you're all good this morning. We had shouted gold longs, probably the best trade of the trade that's setting up next. We said was gold longs. I don't know if anybody was in when I was talking about this. But this was at 20 past 10 this morning. Gold moving into focus now, discounted against real yields and bonds. The challenge is the bid on the dollar at that stage, of course. If that goes offered, we can expect to see a lift in gold from the low edges, and that was at half past 10. Now, unfortunately for us, gold didn't come back down to retest the lows. So at half past 10, we're telling you that we're probably more inclined to be a buyer. And you can see we never got down into the bottom edges here to buy into it. And you can see that over that next period, we actually did have quite a substantial little lift. We went from a low print price of 86s to a high print price of 93s. It was still worth $700 unis, Paul. I know we didn't get the best price, but you could still see there was a couple of little short-term springs. You got a short-term spring against that level. You got a short-term spring against that level. So there's no excuses for maybe not being able to pick up on one of these two trades here. And the lift on that trade was pretty reasonable. We got back in towards that top 1794 edge. So you can see again this idea of understanding what it is we're saying, looking for the right things at the right times, And obviously staying on top of your tweets is quite important. Because that little call on oil saved you a fortune. That little call on oil saved you, potentially made you a fortune. But instead of trying to fade into this uptick in oil, if you read the tweet, you'd say, well, we'll let it go, we'll let it go. And obviously once you get the final stopping point at the 25s, then you start fading into it, then you make a big double profit on the way back down again, which is nice. So you can see it's not about one piece, it's just about developing these ideas, isn't it? It's just about trying to understand a little bit more about what the hell is going on here. All good? Yep, all good. Now, one of the trades that we talked about was a spread trade. This is one of this would have been a Jamie special. I don't know if Jamie's in just now, but this would have been a Jamie special trade here. Look, the spread developing between the Aussie yen longs against a short oil play. Now, obviously, we were aware of that Saudi comment, so you were waiting for the short oil play to top out. So you're already aware that oil's going up. So Aussie yen should be your first trade, right? So look at the time, 10 past 12. So what are you going to do? What are you going to do? Well, at 10 past 12, here's 10 past 12 right here. There's the Aussie yen right there. There's your buy trade on Aussie yen. But remember, the Saudis are talking at this stage. The Saudis are talking. And obviously the oil price then goes. And then when it hits into the top edge and we start seeing some value in the oil, we then sell oil against that. So there's your spread trade right there. You're long Aussie yen, and you've gone from 82.05s, currently trading 82.15s. You're short oil. You've gone from 20s down to currently 80s. So you've made a brilliant profit on Aussie yen longs, and you've made a brilliant profit on short oil. You never once had to even use a stop. You never once had to use a stop on that trade. And you've ended up with a double alpha profit based on a long Aussie yen trade and a short oil play. That's trading, guys. That's real, proper pro-bank trading. That's what the big bank desks do. That's what the big bank desks do, is they don't guess about which one's right. They trade the two of them. They trade the two of them. We actually shouted this one in the room as well, this idea down here where we were selling bonds into that top edge, closing our long position. And you could have sold that. You could have sold bonds against a short Aussie yen position, couldn't you? Look, short Aussie yen right there. Short Aussie yen, short bonds. Well, think about it. Short Aussie yen and short bonds, that should be almost impossible, right? So you start thinking to yourself, wait a second, well, that's got to be a trade, right? That's got to be a trade. There's got to be some value in this. And sure enough, the bond price did drop and the Aussie yen price did drop. And you start looking at that and saying, that's spectacular. That's a spectacular trade. I mean, they're just out of whack completely with each other. So when I look at that, you're saying, well, that's the fact that we've made money on both of these bad boys is unbelievable. Unbelievable. And yet there it is. And yet there it is yet again. Another perfect bank spread trade. No wonder the banks can put millions of dollars at risk on these trades, because they're not actually putting any money really at risk, are they? They're hedging out an awful lot of that exposure by the other side of the deal. One day, the penny will drop when your account's big enough, when you've saved up enough money to actually trade these pairs, and you'll start seeing the incredible revelation that pairs trading gives you. Because now you're not having to guess about market direction, and now you've got confidence to play into a position. And that's when you start making the big, massive amounts of money on trading, guys, because your risks are less, not more, when you take that second pair. When you take that second pair, your risks are less. Even though the money committed is more, the risk actually is a lot less. Perfect, isn't it? Perfect. So welcome in, guys. Numbers out in 6 minutes. I'm going to grab some lunch. I'll get through the numbers, and then we'll see what the afternoon's got for us.